Hello and welcome back to our business tips. Michael Lapede here to talk to you about gross ups on dividends. What is a dividend gross up? Well, basically if you receive a dividend, that's the actual dividend. And then they gross it up, they give it extra boost in income, and they put it up here, and they say, oh, it's more than you actually got, we're grossing it up, and that's what you're going to be taxed on. And most people say, well, that doesn't sound fair. I got 100,000 dividends, but they're telling me I got 120,000 in income to claim? Why? Well, there's a dividend tax credit that goes against that. And to me, it's just a lot of complication. It's the way the government's done things over there. Is they love to complicate things. But I've heard someone tell me like this. It's almost like if you were an employee and you made 130,000, you would net 100,000. So that's what you would get in cash. In a dividend, you would get the whole 130. If it was 130, but if it was 100, you get 100, and they gross it up to 130, almost like employment income. But then they take this tax credit off to bring it down so you don't pay the extra tax, in a nutshell. You're never going to pay the tax twice. So if the corporation paid a certain amount of tax, the idea of that dividend tax credit is it offsets the tax paid by the corporation. But in the meantime, remember, they're grossing it up. So if it's 100,000, they might show it as 118, 120, 125,000, 135,000, 138,000, depending on the gross up of the year. Now, currently the eligible dividends, those are the ones from public corporations or larger corporations making over 500,000 net, it's a 38% gross up. Whereas an ineligible from your small corporation or from small business corporations is only 15%. Okay? So when you report on your taxes, though, remember you're reporting not the actual dividend but the grossed up reported dividend. So you're always looking at reporting higher. Okay? And at the end of the day, that dividend tax credit, though, offsets it. So it's not like you have to worry so much and say, oh, I'm paying more tax now because they gross it up. No, you're not paying more tax because the dividend tax credit offsets it. I know. It's almost crazy that they're even going through all that loop to just bring it back down again and save you the tax anyway. But that's the system, and you got to follow it. So that's why I'm telling you this. One thing I do like about the gross up is if you're claiming credit, your notice of assessment looks a little higher than it should have been than your actual money received. That does help your notice of assessment. Depending on the lending company, they might ask you if it's dividends or not, and you have to tell them. But if they're just looking at the NOA, it actually might help your credit. If you got questions on this or anything around dividends or anything that we talk about, we'd love to hear from you. Post in the comments below, and we hope to see you in the next video.